Can the crypto rally keep going? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Mish Schneider, Chief Strategist at MarketGauge.com. Hi, Mish. It's great to have you back on.
It's so good to be here and see you, Maggie, again. And viewers, thank you for watching.
Yeah, and we made it. We made it through the end of the week. It's been a rocky one, and really interesting today. We saw a pretty big sell-off in stocks. Nasdaq down over 2%. Listen, I guess it's not surprising given the huge post-election rally we had. We did have the dollar stronger, crypto kind of hanging on to its gains, bonds sideways, but a lot of talk now about rates again. What did you make of this? You warned me that November can be treacherous. You've been warning all of us. Why is it? Is there something seasonal about this, or?
Well, there's definitely a seasonality to it because this is when people get fearful about the consumer. Will they show up for the holiday season? Now, and particularly in an election year, which generally is very bullish at this time, this particular election, I think, was of concern only because everybody started to think in black or white. I mean, this has been actually a picture I just posted on X, in that there's so much shades of gray and people forgot about that. And so what we're seeing right now is that we went from all cheer and euphoria to a reality setting in, like, wow, what's really going to happen? Number one. Number two is, can any administration, whether they make the government small or keep it the same or grow it, I mean, can they really do anything about things like inflation and interest rates up to the Fed? And then, of course, Powell had his say this week. And so, we're in a really interesting time because the market has been so overvalued in pockets and so bifurcated. That's a word that we've been using over and over this year. So here we go. I mean, we kind of hit this pinnacle of this next administration coming in is going to save everything to, well, wait a minute. That's a very lofty task. And maybe things are a little overvalued. So, I mean, I think that's what's kind of going on. But good news is there are real indicators to watch to be able to make the determination about the shades of gray rather than think, oh, we're all in or oh, we're all out.
Yeah, it's a great way of putting it. And I love the chat. Welcome, everybody, because I have questions already about the dollar, about palladium, about cryptocurrencies, and we're going to get to them all. But one of the things I love about the daily research note you put out, Mish, is that it covers the big macroeconomic themes that are moving markets, but it's also very granular, very actionable, gives you levels to watch across every asset class. It really gives you the full picture, which is why we have people rolling up and feeling like they can ask everything across the board. But we're going to do that because we've been, as you say, focused on these really sort of big picture election themes, trying to game out what that means. And we're going to have to continue to do that. But everyone's looking at some of these moves and saying, do I take profits? Do I continue to ride this? Is it real? Does it feel like a bubble? So let's just go through some of these asset classes. And I do want to start with cryptocurrencies. Whether you hold them or not, whether you're thinking about jumping in because you've seen this big move or not, I was really interested to see that you added crypto to your modern economic family. And for those of you who aren't familiar, Mish kind of has this nice way of looking across the economy to try to make sense of it by grouping it into family members. And you added crypto. That's so interesting. What do you see in there?
Well, can I just say one thing that I think really pinpoints the environment right now? We have an asset management company, and we have gotten calls from people who are so upset about Trump winning the election. They're wondering if they need to pull all their money out. At the same time, we have clients who are so elated by the fact that Trump won the election, they want to give us more money to trade. And I think I've never, ever in all of my years of trading and in the business experienced that type of divide. So I wanted to really say that because I think that will come. There's where your shades of gray, just kind of what we were saying before. Now, in terms of Bitcoin, I will also say another paradox. Now forget about for the clients, that's mostly automated trading, and we do have cryptos, and we're in a few cryptocurrencies there, and we've made a lot of money in MicroStrategy, et cetera, et cetera. But in my own personal trading account, I have a crypto wallet, which is up 80%. Not really even because of Bitcoin, more XRP, which that was one of my hold for dear life trades that I actually couldn't believe that I was doing that. And now, of course, the thing has skyrocketed, but that's up 80%. And I have a stock account and that's down about 15, 20%. So yeah, to start with Bitcoin is definitely the right conversation.
But stocks have been rallying. Is it because you picked individual names or sectors?
This week,
things were doing
this week. Yeah, a lot of things rolled over that were doing really well that I actually had money in. Now, I did take some profits in the very beginning of the week in blockchain and MP materials, from my own personal account. But still, I mean, I was kind of like holding on to a couple of things like Alibaba and Ulta Beauty and, today and the last couple, Rivian. And those things kind of fell out of bed. Now I have partials, thank God, not full positions, but nonetheless, we can get back into all that.
I'm just going to say, J&J said, oh my God, I'm not the only one still holding RXP, just a principal. That's some kindred spirit. Thanks for opening up the vaults on the Mish private account, by the way, too. But we appreciate that. So let's talk about what's happening with crypto.
Yeah. Okay.
So you're approaching it from a trading perspective. And it's always, and it's been momentum. So a couple of comments, and I think that the first one, I can't take Bitcoin seriously right now. Okay, that it's had huge gains, and I think people have been here before, feel a little worried if they're in it. Is this time different? Is something that we're hearing a lot, especially like, are we finally going to clear that government regulation? And then Akash just said, would the government seriously support Bitcoin over a CBDC? And that's not a trick question either. And these are some kind of like longer term fundamental questions about the future of blockchain. So how are you thinking about this from a trading perspective? And do you just put that in the trading account? Like, is it still a risk asset to you, I guess?
Okay. Well,
a lot of questions there.
Yeah, a lot of questions. Hopefully I can answer them all. Well, let's go back, because one of the things that I was saying on media, and I think even with our last conversation, Maggie, was what were the commonalities between the two candidates? And cryptocurrency was one of the commonalities, in that obviously Kamala would not have been as vocal about crypto as the Trump administration is. And obviously his cabinet, which by the way is probably one of the more exciting things, is all millennial. So it's going to represent millennial interests, which of course Bitcoin is a huge part of. But forgetting about all of that, that might have been the fuel to the fire. When you have a halving, which we had in April, that we have every 4 years, by the end of October, November, crypto starts to rally. Bitcoin starts to rally. This has happened every 4 years. You can show it. It kind of consolidates from April till about October. Then it rallies. And then it has this big crash afterwards. And some of the crashes have been spectacular and have hurt people. And I think that's why people are saying, what do I do? And so I always approach everything with the same dispassionate, strategic money management philosophy, which is when you catch a parabolic move, just like we did back in the old days in commodities, you have to take profits, you have to have trailing stops, and you have to really understand that when you're getting into a herd mentality like we have, and you're listening to, like Kathy Wood said, oh, I think Bitcoin's going to 3 million, and you have to like go, come on, honey, really? I mean, don't say stuff like that, because that is I don't even know where that comes from. But nonetheless, the point is us, normal, regular people, have to look at it as right now we took out, I was a target of 90, but we didn't really retrace very much. So it was good to get back in at 90. We closed, I think, over 91. When I say close, I mean closed in terms of the US markets. And now that seems to me like it could go to 100. But that doesn't mean that I wouldn't protect my profits if that starts to roll over. And I think that's how you have to do it. I mean, I made the joke about Ripple, but we're talking about something that I bought at like 23 cents. I had real no risk. and I added along the way. But even that, I had my first profit target at 94 cents, which was the old high.
Mm,
Why? Because that makes sense. So
mm.
that's all, like trying to get all the emotions out of it. Now, in terms of blockchain technology, that to me is a future technology. I like Ripple. Obviously, Gary Gensler, I don't know, did he actually quit or not quit? I saw both sides of the story that he intimated. I'm not sure if he actually did or not. But people are looking at that because the SEC went after Ripple. That's a great exchange system that's used globally. These are things that can continue to grow. So try to widen your mind beyond just Bitcoin. Chainlink looks like it has a bright future. Avalanche, some of these things haven't really quite have participated. Dogecoin, that's more of an emotional trade. And I bought Dogecoin and I got out of Dogecoin at around 36.
Of course you did.
I mean, because I knew it. I mean, it didn't take a genius to figure out with Elon Musk's influence. And then, of course, he had to help the cause by coming out with the Department of Government Efficiency. Well, we could talk about that another time. Anyway, my point is this. Cryptocurrencies are here to stay. Decentralization is definitely a theme. And it is something that we're seeing more and more now because it looks like the cat was let out of the bag with this oncoming administration. But we know that nothing goes up forever. Things do correct. The more speculated something is, sometimes, the bigger they are, the harder they fall. That's physics. So, you just have to really, like I said, remove your emotional, understand that there's still a lot of hurdles that have to be, but then a lot of things have happened this year to help. ETFs, that happened before Trump wasn't nominated. I mean, this has been a path, like I said, had a jet propulsion with this election result, but that doesn't mean that jet propulsion is going to stay in gear. So be smart.
Yeah, I love that. And it does feel a lot like you're talking about a commodity, when you're seeing some of these moves, maybe a volatile one. That really resonates with me. And it makes sense, of course, to sort of use the framework, right? We talk about it all the time. Have your framework and apply it. And if it's too risky for you, wait, that's Elon calling. He heard us, Mish. He's watching. That's great. So, okay, that is terrific. Wow, you guys are on fire today. We have some really great questions.
Let's get to them.
Yeah, let's get to them. Okay. Let me find them because they're also talking a lot. Okay, so we'll talk about metals in a moment because we know that people love to tap you for that. Christopher asked, what does the rapid decline in the MOVE index from 136?
I'm sorry, that's my mom.
Oh, okay. It's just
I'm not going to go, hi, Mom, I'm on the air.
No, I know, but make sure she's okay, though. Feel free to text. No one ever remembers when you're on air, right? I try to tell my family all the time.
Especially your 91-year-old mom.
Yes. Well, she gets a pass for that. Hi, Mom.
Anyway,
Okay,
let's go back to Christopher.
Christopher, what does the rapid decline in the MOVE index from 136 to 99 in the past 8 days? How does that affect your thoughts on the U.S. Treasury 10-year note?
That's another really interesting topic right now. You know what? Oh, God.
At least we're live, people, for reals.
All right. She's probably now worried that I didn't pick up the phone because, right, she keeps calling. All right, I'm sorry. Guys, you're going to have to do a real live moment here. Oh, no, she hung up. Okay. I think she just got my message. Sorry, my
we said it's been a week. It's been a week. We love moms though, so they can interrupt us. Okay, that MOVE index in the 10-year.
All right, Mom, I can't talk to you now. Mom? All right, I think she hung up.
Okay.
Oh, I'm sorry, Maggie. Maybe we'll have to stop.
Right.
I don't know.
If you're sure she's okay, just turn the ringer off. Let it go to voicemail.
I thought I did that. But I got the new iPhone, by the way, the Apple.
AI won't let you.
Right, and it used to have a little switch that you can turn it on and off. I don't see that switch anymore. If anybody can help me where that is. I even asked Siri to silence my phone, but whatever.
I tell Tony Greer that technology is trying to kill us. Okay, let's get back to that 10-year.
Okay, Christopher, and so it's so interesting. First of all, yields for the first time in 22 years, I think, are offering a higher return than the SPY. So that's really interesting. Even with this big rally, Could that lead to, especially in an uncertain environment, people pulling money out of the stock market and going back into bonds? Well, you had some real major influencers coming out recently and saying that they were short and expecting the yields to go higher because they didn't believe that inflation was under control. And so that statistic just came out. We're also getting a re-inverting yield curve, which is also interesting to me. This kind of thing hasn't happened since 1968, I was reading, 50 years. And so what happened from 68? I mean, there's so much to talk about in so little time, but I love to look at history. So in 1968, you had the end of Johnson decided not to run again, and then Nixon became president. And then you had, the 4 years of growth. And then you had a terrible recession after he won by a landslide in 72. Now, of course, we're not saying that could happen now, but just looking at the yields, that mirrors back then. So does it mean we're going to go into a massive economic growth? Possibly. But it also could mean that it's getting ready for a much higher inflation. Also possible.
So either one of those sounds like yields move higher from here.
Exactly. So that's something to watch for. And then if yields move higher, whether it's because we're having a major expansion or we're having major inflation, what does that do to the rest of the market? But certainly it gives an opportunity in the bond market. And that's one of the reasons why I like to watch junk bonds so much, because, you would think that high yield, high debt would do well in a risk-on environment, but it just sold off also hard this week because it's probably worried a little bit about the risk in some of these companies that may not be able to maintain paying out because they go bankrupt this high yield to the junk bond traders. So
that's interesting because high yield, even when we've seen the bond volatility, high yield held in there. That was one of the surprises, right?
Exactly.
And I remember you and others saying, watch that, because if that starts to go, that's a worrying sign for the bond market.
And Maggie, that's exactly what happened at the beginning of 2020. While the S&P was making new highs at that point, and the market looked like it was just going to keep going. All of a sudden, I was watching these high yield, high debt bonds, HYG is the symbol I like to watch, start to crash. And I'm like, something's up.
So does it feel like the move this week, was it just a sell-off, or did you see something that, like, what would you be watching for? I know I'm asking you for levels and you don't have any in front of you, but
no, but I can give you some levels. If
we're what should people watch to see if this starts to be?
HYG broke the 50-day moving average. And 79.50 was kind of like my pivotal area. So we closed down, but more like 79.15. We've had these corrections before, and I'm not seeing tremendous volatility. But what did concern me this week is our real motion momentum indicators show a strong bearish divergence. So again, not panic, but at least something to keep an eye on as you're starting to make decisions about the market next week, given the sell-off that we've had. Also, getting back to yields, if we're having an economic expansion, wouldn't that mean that small caps would do really well? We can have a tech-led rally and talk about an economic expansion that's inclusive and U.S.-centric, because we know we need manufacturing and industrial production, and we need the consumer. And transportation, by the way, looks probably, of my economic modern family, the best right now, poised, may had a nice move. So there's so much uncertainty. That's why I find comfort in these indicators that we're talking about. And the other thing we have to look at is if we do get some kind of a collapse, let's say, in the high yield, high debt, and things start to look a little more uncertain, if we start to see more selling in some of these key areas, and if NVIDIA doesn't deliver next week, then you have to say, well, what happens if everybody's wrong about these higher for longer, because now they fly into the TLTs or the long bonds for safety, thinking that the Fed will have to lower the rates, won't care about inflation, rather needs to save the economy. I mean, I thought, and this is a little aside, but this is how my brain works. I was imagining after Powell's conference last week that I don't know how to stop this thing. I'm sorry. Is anybody giving me any advice on how to get my cell phone to stop ringing?
Somebody in the chat, tell Misha to turn off the new iPhone.
Oh my God,
16,
because that
if you don't mind.
side thing there doesn't work anymore. You know, like you used to be able to just go like
Yeah.
this, and it doesn't seem to work
We
anymore.
have some Cracker Jacks, and somebody will message us.
Okay,
So,
please.
so how does your brain work? You were just making
My brain works that, you know, after Powell gets on a press conference and says that, oh, well, we don't necessarily feel like we have to lower rates, Trump calls him immediately and says, what the heck did you just say? You know, I just said you don't have to worry about your job, and I know I can't fire you necessarily, although this is Trump. And we know we want lower interest rates. Don't say that anymore. And then today, what had happened? You had all these other Fed speakers come out and say, well, you know, we may still lower. So that was my imaginary
walking back that message a little bit.
Right.
Yeah.
Anyway, but let's get back to it. So I hope that answers. So you want to watch TLTs versus the SPY. As long as the SPY is outperforming TLTs, we're good. You want to watch the TLTs versus the junk bonds. As long as the junk bonds are outperforming the TLTs, we're good. This is all noise. If that should change, then that's information, obviously, number one. And number two is getting back. We could have higher rates for longer, even after we see a 75 basis point cut. It could stop there for a while. And we can still do well, provided, and this is where a lot of the policies will come in, we can actually succeed in lowering the debt and lowering the spending and maybe, you know, cutting taxes a little bit, maybe helping people with wages. But these are all things that take time.
Yeah. Okay, switching gears a little bit, uranium. We have a question about uranium from Doug. Do you still like uranium, and do you have a favorite SMR?
Well, you know, we talked about this last time, too. I remember saying that uranium is one of those, URA, or one of those symbols that I just find impossible. And I did look at a chart before I came on, knowing that probably would be asked that question. You know, so the whole basis of nuclear energy has really taken a back seat again. And I think it's going to stay in the back seat for a while because we're into a new admin of drill, baby, drill. So I don't know if I would necessarily be all that excited about uranium. What's interesting is with oil going down, that's really killed the solar industry because they're saying all the tax incentives and the government supports for the solar industry are going to go away under Trump. And so all these companies that have basically been hanging on because of government subsidies in the solar industry, without those, will just go by the wayside. You know, and all of this is a cycle that I find very interesting. So that's where uranium comes in, because the conversation of nuclear energy has gone away, but will it come back? And the way it will come back, I think, will be at least a couple of years when we get to a midterm election. If we have any kind of major climactic incident that breaks down the grid system, that, or we have a major geopolitical situation that sends the oil and gas soaring again, although that seems less likely now. The point is at some point, that will be a tremendous opportunity, including uranium, but I would not touch anything in the solar space right this minute.
That's fantastic. Thank you. So helpful. Ralph asking, we really cover everything when we're with you, Mish. Any view on the US dollar versus the euro, yen, and pounds? This has been some really interesting action. There are some people are getting really concerned about what we're seeing here with the dollar. What do you think? What are you looking at here, Mish?
Well, it did just go into a major resistance at around that 107 level. So that's, you know, who knows? We saw a little bit of a pullback today. But I looked at the beginning of the week at a euro dollar chart, and the euro looked really weak. Like there was like this giant bear flag potentially forming, and that was very troublesome. And of course, the dollar yen, that's a whole other ball of wax. And the Japanese have been extremely unclear. By the way, a little aside is NVIDIA is trying to help Japan with their tech by sending them chips and things, which I thought was kind of interesting. But nonetheless, that also, I mean, if it gets through 156, the dollar yen, I would be very concerned about Japan and what that might do. I mean, that's an event that a lot of people were talking about for a while. You're not hearing it much anymore. But at the flip side, if the dollar yen breaks down under 150, then that would mean probably to me that the dollar is getting ready to go down hard, which of course then brings back the inflation equation and also makes you wonder at that point, is the intention to lower rates more aggressively than we thought. It's such a, right now we have a jigsaw puzzle. That's what this is. You're looking at a giant jigsaw puzzle. And so that's why I keep saying I'm going back to my regular indicators to try to figure out my trifecta of inflation. Silver outperforming gold, even with the correction. The dollar, strong, so no inflation there. Sugar and food commodities. Sugar is not going down, but it's not exactly rising to any kind of alarming degree. And the food commodities look like they're bottoming, but we haven't really seen evidence of that. All of those things will tell me the risk on we talked about before, what the commodities are doing versus on my trifecta. And then, of course, if we're moving into the economic modern family, what Granny does, because basically retail, because what that did was consolidate between 70 and 80 for 10 months. Now we're into 11 months. That would have broken out over 80, took out 80 and closed today below 79. 78 still support. But without the consumer, I don't care what anybody says, you have to examine this rally. And then, of course, what happens with the Fed, that's where your stagflation can start becoming the narrative again for 2025, which I haven't fully let go of yet. But I'm obviously trying to minimize it because I want to be optimistic.
Yeah, it's so interesting, and keen observers will remember that Sam Rines said the same thing to us, different words, but said at the end when I asked him what's key, what are you looking at? He said exactly that, Mish, that he felt like the consumer was really key here. And we have a tendency, because of what's happening, and we are going to be in a headline environment, which is going to create a lot of volatility as we move through the inauguration. We're getting cabinet picks dropped, and you can see the flares and everyone trying to figure out, you're seeing certain reactions, but that I was half expecting people to sort of say something about the election, and instead he was like, I'm watching the consumer. That's what matters. The rest of it matters. Yeah. But if you don't have that key, that's going to tell you everything you need to know. So holiday shopping, how do they feel? What kind of shape are they in? And you just said the same thing.
Paris, I was thinking about Costco, for example, which I got my Costco card this year. So I've been like, yay, we're going to Albuquerque to go shop at Costco. And last time I was there, I've been looking for a set of knives, in the board with the big knife all the way down to the steak knives for years that I felt was be good value for the money. And, I've had knives, but I wasn't really all that happy with them. So I go into Costco and I see that they have a set of knives for $160. I open up the box. They look really nice. Steel made in Germany, but they are produced and manufactured in China. And I realized that Costco is basically so successful because most of their goods they can sell cheaper because they're made in China. Mm. And so I'm a consumer now. If I went into Costco and all of a sudden it was competitive with going into, it could be great for the small business retailer who might be able to compete again. There's always a silver lining. But in terms of these big box stores that get a lot of their goods from China, how is that going to affect a majority of the consumers who have counted on that? Mm-hmm. And this year you saw Dollar Tree collapse. So, you got the poorest of the poor not doing well. The middle class has been the Costco, Walmart, TJ Maxx shoppers counting on exported goods from China. And then, the retailers, small businesses have not done well. Maybe they do better as a result. We're writing history right here. What can I say?
Yeah, we are. Chud said you need to check out Japanese knives. Noted. Thank you, Chud.
I know, but they're expensive.
We know we have mixologists and culinary whips in this chat as well, which we rely on. So someone came late and had a crying face and said, did they cover Bitcoin already? So best YouTube comment. We're going to just go back over that for a second and maybe wrap up with this. So Mish mentioned a lot. You can go back and look at it. Mentioned a lot of cryptocurrencies. It sounds like you're going to continue to ride this rally, Mish, but you're going to protect yourself and take profits on the way and look for opportunities to sort of hedge. You're going to be nimble. You're not just sort of all in.
I think history, regardless of what happened today, just if you look at the crypto over the last 18, 19 years, tells you that that's what you have to do. This is not like the S&P 500 and that would have a 10 or 15% rally and then the occasional 40 to 60% rally. Failure, not rally, failure like we saw, obviously the last being COVID. This has to be traded like everything else, trailing stop. By the way, when we talked about the euro, one thing I want to mention is I saw two charts today that I think are interesting. That's euro related. One is DAX. DAX looks like it might be bottoming. And Spain, EWP, also looked kind of interesting to me. So I'll be keeping my eyes on them next week.
It's so interesting because Europe's economy is terrible. Germany's government's collapsing. And I've had more than one person give me a long-term prediction that the European Union is not going to survive.
Really? Well, that's interesting. And that could be. But it also could be, just in terms of ratios, I'm a fan of ratios.
Yeah.
That the performance to the U.S. versus the EU is at like a 75-year spread.
Right. And if you are going to get a weak euro, that's going to help, right? At the margin for maybe some companies.
Who knows? They may turn to the people that, we don't want to deal with, like China and Vietnam and Thailand and Russia and India, and say, hey, we got to do something. We can't stand to buy things that are at much higher levels from the United States and survive. What are we going to do here? And, when people talk about World War III, I look at it, if it's ever going to happen, and I know we have to wrap up, it's going to be through the monetary, the financial system, or through the cyber system, but it's not going to be with, nuclear weapons and guns necessarily.
Yeah. Well, some people... Pippa, for one, if anyone follows Pippa Malmgren, she's on Substack, thinks we're already in World War III, by the way. And I know from talking to Security Scorecard that some of the cyber attacks, that's on the site. Go check it out. It's real and it's happening. So in some ways, maybe this is already playing out. We do have one. I am going to ask this one last question, J&J. We're going to steal you for one more minute, Mish. I just want to encourage everyone, if you're thinking about these big themes and you're interested in geopolitics, if you have not, listened to the interview I did with D. Smith. It's going to rock your world. It's really big picture. It's really important to just pay attention to what he's saying. Because
I'm going to listen to that too.
Yeah, there are some big changes coming, and you can decide to agree or disagree, but it just puts it in a nonpartisan. It's completely nonpartisan, and it's global. But there's a lot of potential chaos coming. And so I highly recommend it. Okay.
What brings in gold? Is the question on gold?
Yeah, well, it is actually. Speaking of, well, it's not gold specifically. I don't know that we can cover them all. You just mentioned silver. Can Mish cover metals before you leave us for the weekend?
All right, real quick. Yeah. What is gold but the reactor to chaos? And so it's gone down partly because of the dollar. People saying to me, well, the strong dollar, but we've had a strong dollar and gold was still going up. No, it's gone down because momentarily we think the philosophy has been that, well, first of all, Bitcoin stole the thunder this time, number one. And number two is that things look like maybe the Middle East war is not going to escalate. Maybe Putin's going to stand down. But exactly what you just said about D. Smith is that there's still always going to be an underpinning of chaos that can erupt. And you're going to see it in the gold price. Again, another great indicator, right? So gold at 2,600 is a great place for it to consolidate. I'm still very bullish. I thought 2,800 was a great first target, but I still think we can see 3,000, even 3,400. And that's my view. In terms of, that would be the flight to safety gold. In terms of silver would be more of the inflationary factor, which we've talked about now. The keys to look for would be if silver starts to outperform gold. Right now, silver holding $30 an ounce is not bearish to me. It's just resting. That's how I look at it.
I think someone asked about palladium. Were you looking at palladium? I thought I saw that in the chat.
Yeah, I haven't looked at palladium this week. I know I looked at it when we talked last time, so I'm not really...
What about Dr. Copper? Mr. Copper.
Oh, I love talking about Dr. Copper because, copper, there's a low supply. Well, a lot of people thought copper was going to go crazy when if China's economy was going to come back. Obviously, China's economy now is another controversial thing. But, if we're going to see any kind of economic expansion in the U.S., copper has to perform, you would think. And, interesting. I mean, it's another thing that's mined in other places besides the United States. And so this $4 level has been very key, but it looked like it was starting to reverse. It kind of sold off a little bit today. I keep an eye on it. If copper, I have it in my notes. If copper takes out $4.15, I believe that's the December contract I'm watching in the futures, then I would probably look at COPX because I like the fact that it's holding 40. That was 2 years ago. A lofty goal was to get through 40. Now we've gone through 40 and we're holding it. So it could be that we're getting ready for another rally. And if it breaks down under 40, never mind.
Amazing. Jay just said, I also love copper. I think Mish is my spirit animal. I love that comment. Mish is always so fantastic. If you do not get Mish's daily note, I know that I'm going to get a question from some of you. I'll put the link in the description so you know where to find her. So you can keep in touch with her in between her appearances here. Mish, thank you so much. You go check on your mama.
I know I was going to apologize again for all the interruptions of the call, but everybody's got a mama. I mean, and a lot of people don't have mamas still alive, so I'm so blessed to have mine still. So I apologize, but I hope you understand.
That's okay. We totally understand. And I'm just going to give a shout out to Johnny. It is funny that we can trade crypto and talk about crypto and also struggle with our phone, but trading is something that takes a lot of years to crack. And that's where Mitch gets her expertise. The phone stuff changes every 5 minutes. Anybody can do that. We love it. Thank you, Mitch, for bringing all that expertise. Have a great weekend, everyone. Enjoy yourselves. Take a break, get outside, have a great time. Last weekend we said who's going to enjoy themselves, and it was like 50% of you. So I hope we're upping the odds this time around. Appreciate you all. We're going to have Vincent Dillard, who's got a lot to say about emerging markets and the dollar and inflation on Monday. So we'll see you for that. Take care, everybody. Good luck out there.